Hi everyone, Tom here. Today is May 21st, 2009, and I wanted to share with you a few things I've been looking at in the journal and Market Watch, and let me actually just read the first paragraph of an article I pulled off of Market Watch, and I quote, Treasury prices extended gains Wednesday after the minutes from the Federal Reserve's latest meeting indicated policymakers considered increasing the amount of treasuries or mortgage-related securities they might buy to keep a lid on consumer and corporate loan rates. Now, first of all, the first thing that caught my eye here was that this wasn't first page news. This was like second, third page in the back somewhere. And to me, it's big news. Probably the reason it's not on the front page is because, and I'll read another paragraph from the article, the central bank has already agreed to buy 1.25 trillion, that's trillion with a T, of agency mortgage-based securities and up to $200 billion in agency debt by the end of the year and up to $300 billion of treasury securities by autumn. So basically what they're saying is, hey, we may need to buy some more bonds to keep interest rates low. Now, what's the deal about buying bonds to keep interest rates low? Well, let me read another paragraph from another article that this comes from the Wall Street Journal. And I quote, in a healthy economy, rising treasury yields and mortgage rates aren't a problem. Well, we're obviously not in a healthy economy right now, so it is a problem. But if yields rise mainly because the market can't absorb the glut of new treasuries being dumped on it by a government fighting recession and printing money, the Fed might need to act. Duh. So let me continue on here. One more article. This is also from Market Watch. I really get a kick out of this quote here. This is Fed eyes more purchases of long-term assets. But towards the end here, regarding inflation, most members of the FOMC, that's the FOMC, said they expected inflation to remain subdued over the next few years. Boy, I hope they're right. Risks of deflation had ebbed since the last FOMC meeting in March. FOMC, by the way, stands for Federal Open Market Committee, which is a Federal Reserve meeting, or committee of all the chairmen of the various Federal Reserve boards throughout the nation. Okay, but to read on. However, there were some who worried about inflation if the Fed cannot reverse course on its quantitative easing policy. A few said it was simply a bad idea to forecast inflation during a severe recession. Some of you have heard this analogy before, so for those of you that have, I apologize for being redundant, but here's something that I just have to kind of chuckle at. However, there were some who worried about inflation if the Fed cannot reverse course on its quantitative easing policy. Well, let me give an analogy to explain why I find that so interesting. Think of going into debt equivalent to abusing alcohol, being an alcoholic, let's say. And take your hypothetical alcoholic and see that as the American culture, the government, the consumer, deep in debt, and so on and so forth. So here we are just buried in this debt. And we have through drinking, through debt, issuing debt, we have had, quite a ride up until 2007 or so. And, just like my hypothetical alcoholic, though, we had a crash and what you might say, a huge hangover. Still experiencing the hangover, if you will. We realized we had a problem. We realized we needed to do some serious thinking and do something really radical to solve our problems. Well, just like my hypothetical alcoholic friend, who, let's say, for many years has been drinking and binge drinking or whatever, and now has recognized he's got a serious problem and needs to do something about it. Well, wakes up with a huge hangover, tells his wife, employer, everybody, hey, I recognize I got a problem. I need to do something about it. I'm going to check myself into the Betty Ford Clinic. But I've got this monstrous headache, and I can't think, and I just need to be able to function so I can put everything in order before I dry out and get my life back together again. So what does somebody who's suffering from a hangover do to be able to function? Yeah, they start drinking again. So basically, what they're saying here is, however, there were some who worried about inflation, and it says if the Fed cannot reverse course on its quantitative easing policy. I would change that with, if our hypothetical alcoholic friend cannot reverse his course of drinking and check himself into the Betty Ford Clinic. Now that's way too difficult. You start drinking again, you start feeling better, you say, hey, I'm not feeling that bad. Maybe I don't need to go into the Betty Ford Clinic. Maybe we don't need to worry about going deep into debt and printing money. Look, so far we're still here. So in any case, the scenario continues to unfold for somewhere down the line, as I have been mentioning to you for some time now, that through this quantitative easing, we may very well see a period of prosperity. I hope so. But on the other side of that, it's really hard to say what will happen. Certainly the biggest challenge is going to be to stop the drinking. And, when you do start to drink again, the symptoms go away, the headache, all that stuff. And you might look like you're doing just fine, but you still got maybe some liver problems. Maybe you've got a cirrhosis going on there. And since you're not really experiencing such symptoms anymore, you're feeling pretty good. So we're worried about the other side of this quantitative easing, as we've been saying. And if the Fed may just let it run, may try to stop it. We don't know. What we want to do is hopefully do whatever we can to maintain, protect values and assets during that period. So that's it for today, and until my next video, or until we see you again in the office, that's Tom signing off. Oh, by the way, this headset here, I'm not flying an airplane or anything. What I do is when I talk into the microphone with the headset, I am transcribing what I'm saying, so it makes it a lot easier to put it through compliance. All right, so we'll see you next time.